Welcome to the Swing Trading with Cycles channel. It's February 14th, 2023. We're going to do our update on natural gas today. We'll also look at oil and UNG as we usually do. It is February 14th, 2023, as I said, and natural gas has been consolidating for the last 1, 2, 3, 4, 5, 6. This is day 7 after that low that we made on Friday before last. That was day 40 of the daily cycle. If you're new, welcome. Take a look at the pinned comment to get caught up. Past videos, but also important lessons about price action and how to think about things in the context of cycles. When I say cycles, I'm not talking about anything mystical, folks. Just data. How long does a rally last? How long does a decline last? This rally lasted 5 days. The decline lasted 35 days, right? The whole thing was 40 days. That's obviously bad, right? So if you're in a daily cycle and it looks like the rally is over after day 5, that's a bad sign, right? That's when you pull the ripcord. Now is when it was up here around $6. Cycles are thinking about things in the context of cycles, and again, it's really just thinking about price action can save you a lot of money. And once you avoid those huge drawdowns, that's when you can start to see big gains in the market. So we are now on day 7 of consolidation, and what do we have here? Another close above the 10-day moving average. We talked about how that was going to happen eventually. We were going to need to see that by definition. And here we are, we're seeing that, but yet we are still, I'll just move, essentially we got to get above like this area here, right? Like this, to be really clear, this specific candle here on February 8th, day 3 of this new daily cycle is the high so far. It's a bearish outside candle. It went above the high of this candle and then also went below the low. These kinds of candles tend to see follow through in the direction, right? In this case, it didn't see follow through. It actually has just seen consolidation for the following 4 days. So once we can break above 2.657, that's the high from this candle, we would expect that we would be on our way to test 2.780, which is also your high on the weekly chart, on like your previous week's high, right? So that's above this candle here, right? You can imagine at some point we get our move, like this candle fills out, because it's only Tuesday, so there's a lot of trading to go. Let's say this candle fills out and does something like that, right? So getting above the high from the high of this candle, that would make this candle our low. This is the same low on day 40. In this case, of course, this is a weekly chart. That's an important part of getting an edge. You can't look at just one time frame. And that's the most important thing I'll say about all this, and this applies to oil and UNG as well. If you're only looking at one time frame, you're missing a big part of the action. Look at these. What is that? 1, 2, 3, 4, 5, 6, 7, 8 red weeks in a row, and 7 weeks in a row where we made a lower low. So this makes a lower low than that. That makes a lower low than that. Lower low, lower low, lower low. All of a sudden, last week, we stopped making lower lows. Again, this is the weekly chart. If you're only looking at the daily, you're not really understanding what's happening. And we also have a green week. Now, obviously, we still haven't really gone anywhere. We're still inside the range of the candle from, basically the first week of the year. But we also aren't going down anymore. It's an inside candle. It's a chance for price to catch its breath. The catch is this could obviously be setting up for more downside like that. Right? Because this is just a consolidation. People agonize over, well, is this bullish consolidation? Is it like, it's just consolidation. Relax. We know what the levels are very clearly. Now, if you had to, the lean here is obviously bullish because these candles remain green, and you can see out the way it's sort of fighting back on these lower time frames. This was a red candle at one point. Now we're turning into a green hammer. And again, the opening price of the monthly candle is 2.73. Is that right? Yeah. So we are close to the monthly candle becoming green again, the February candle. These are all important milestones. Price can't reverse unless the higher time frames start to go green. So we have to see that. And that's what, and in the context of cycles, that's month 32. Is it possible that that's a long-term cycle? It is. Again, you have to be aware. So it's kind of lower low. You have to be aware of something like this, and we'll watch for that. You can trade against that. So that's the natural gas chart itself. And again, I always talk about the yearly chart. We are below last year's low. So the low in this chart every year is every candle is an entire year of price action. So last year's low was 3.638. 3.638. So I think last time we looked, that was like 40% up from here. We've rallied a little bit, so it'll be less. Oh, yeah, still, it's about 40% from here. So we would have to rally about 40% just to get to last year's low. That's important context. If we're going to get back to an uptrend, then by definition, we are going to have to get back above last year's low, obviously. So let's look at Boyle. Same kind of time frames. Again, same pattern, right? So we have an inside monthly, and I should say it's a double inside weekly candle now because, and this is applies for natural gas as well. Last week's candle was inside the range of the previous candle, that first candle of the year. But this week's candle is inside last week's candle. So we first need that breakout above here, which tells us, we may be about to test that. And again, for Boyle, that's 787. So not a whole lot happening, but again, one of these things is not like the other. Look at all these green weeks. And then we have these red weeks. We have this inside week to close green, and obviously a lot of trading to go. 3 more days of trading, but so far green. That's important to know about. And you can see the action on the daily chart again, just kind of consolidating here. And we'll look at the levels on a lower time frame. But again, this would be day 7, and so the problem here is that you're wasting a lot of time. Like remember, we had previous cycles that topped out on day 5. In this case, it's entirely possible that the top of this cycle was day 3, which is interesting because for Boyle, the top of the cycle is actually day 2. So, Boyle kind of like that bearish outside candle for natural gas on day 3. That's this candle here for Boyle. It didn't actually get to make that higher high. That's just on account of it not trading overnight, obviously. And so if we look at UNG, just same kind of idea, obviously different levels. And so again, that weekly high for UNG is 946. And you can see, this actually looks even more bullish, right? Like generally, statistically, you would expect, maybe a little bit of continuation off of this candle, something like that tomorrow. So that's going to be interesting. And the monthly, the monthly candle is just a whisker away from going green. So it opened at $8.91. So we're 6 cents away from going green. That is a good sign. That's a pretty good sign. So if we do look at those lower time frames, let's look at natural gas itself because that's going to have the most data on these lower time frames. And you can just see the way price is behaving inside this channel. This is the 1-hour chart version. Look at this. It's just kind of like, yet at the same time, it's pressing the highs, right? Now, obviously, we've had these downside touches. And again, don't freak out over the lines. This is just looking at a price range. Price has been bouncing around between these. On the 8-hour chart, we can see the last two. You can see this swing low, which is a higher swing low than this one, which is a higher swing low than this one, which is the one that marks the bottom. Now these are slight higher lows, but that's an important signal. And we are now above this last high. Are we actually, or did we kind of pull back? Let's see. No, we pulled back a little bit. So on that really micro time scale, we need to get back above 2.610. That's this swing high here. And that tells you on the 8-hour chart, we are moving on up. And then you could kind of see a world where it finds some resistance. Again, it's not a coincidence, right? That 2.780 level. You see how it looks on that chart. You can kind of see there's a cluster of price action there, and that's because that's your weekly candle, obviously, or the high for your weekly candle, I should say. So that is the lay of the land for natural gas. If we look at Boyle, I don't know. Let's see on the hourly chart. That'll tell us a little something. So yeah, you got this same zigzag move, but look how it's pressing these highs. It's pressing the highs even more than natural gas was, and obviously you can say, well, let's be arbitrary and put the line wherever. It's not about the line. It's about the price range. Like you could call it that, right? So, but clearly it's trying to make that move to around that 780 level, and then maybe even 850 from there. So we'll leave it at that. That's our update on natural gas. We have what looks like a bottoming pattern. Again, the only problem is that we're already on day 7 of the daily cycle, and we haven't really seen much upside. So that's that's worrying. But clearly we have a low. We have a couple of closes above the 10-day moving average. And for Boyle, actually, yeah, so it closed above the 10-day moving average, and then it closed below it, and now it's closed well above it. Actually, the low is basically above the 10-day moving average. Now, obviously, this thing has been cascading lower, so over time, it gets almost easier to close above the 10-day moving average. That's important. That's an important little quirk, but important to see that it did that. So we're going to continue to watch this. There's definitely potentially some upside here. Very clear stop levels, obviously. Thank you for watching.